Hi, ladies and gentlemen. This is Diane Cardano with the December edition of the Hot Off the Press Real Estate Market Report. There's a bunch of great news this month, so I won't waste any time and get right on to it. Let's start with existing home sales so far this year. And as we know, they started out slow, but they're continuing to climb. Continuing to climb this late in the year is really big news. We're having a very strong fall, and I do believe, as I mentioned last month, that the fall will be one of the best we've seen in the last several years, and that the winter might be the best we've seen in a decade. Even if we look at pending home sales, that is still continuing to rise. Now, let's take a look at the foot traffic, the number of buyers actually going into houses now and looking for them to purchase. Again, those numbers are not going up, they're skyrocketing up. This is the time of the year that they would normally level off and start to drop. We're actually seeing the exact opposite. More and more buyers are coming into the market. Now let's take a closer look at the pending home sales and the foot traffic over the last several months, July, August, September. We could see that in 2013, little by little, they began to drop off. Well, we could see in 2014 we dropped off a little bit in August. Then we maintained. It actually ticked up a little bit in September. Totally different than last year. So what does that mean? Again, we're still in a momentum building process. We're not falling off this fall. We're continuing to grow forward this fall. And we take a look at the foot traffic. It's even more dramatic. And now, only can we see they're up this year over last year every month. But the percentage that they're up is dramatically increased. Look at September. We're way over last September. And the number of people going out looking at houses. Let me explain to you why the buyers are back in force. And part of the reason there are more buyers out there right now is the mortgage credit availability. This is right. From the MBA, the Mortgage Brokers Association, the higher that number is, the more credit is available. Here we look from April 2013 all the way through this past month. And what we can see is that the availability of credit for a buyer is becoming easier and easier, meaning even though we're hearing things to the contrary, the chance of buyers getting that mortgage is dramatically increasing. As a matter of fact, let's break down some of the numbers. Here are the average FICO scores on the conventional purchase loans. People bought a house. This is the average FICO score. What does the graph show us? That the average FICO score has steadily dropped 2012, 2013 to just last month. That's important. That's good news. We're not only at the same levels, same restrictions that we were over the last couple of years. I think we're going to see that the FICO score drop. Now, if we look at the closed loans for FHA, we are down into the 600s. In 2012, even for the FHA loan, the average FICO score was 700. Well, now we're down to 682. So as the credit becomes easier and easier to get for the buyers, there are more and more buyers coming to the market. And ladies and gents, here's another step that points to that. At the last Mortgage Bankers Association conference, Mel Watt, the director of FHFA, which oversees Fannie Mae and Freddie Mac, said to increase the access to credit-worthy but lower wealth buyers, that they're also working with Fannie Mae and Freddie Mac to develop sensible and responsible guidelines for mortgages loan-to-value ratios between 95 and 97%. What did he just say? Fannie Mae and Freddie Mac are going to be doing loans with as little as 3% down? Wow, buyers are out there. And one of the things that they have to realize is they're buying in one of the luckiest times in history regarding interest rates. So here are the interest rates from January 2013 all the way through 2014. And we can see that they're balancing off and dropping a little bit the last couple of weeks. And we have to realize that what the major analysts are projecting for the same time next year is that interest rates are going to be up more than 3/4 of a point. In fact, according to Freddie Mac and the MBA and the NAR, they'll be up more than 1 full percentage point. These projections I'm showing you here were made the last 30 days. They're not old projections. So we know there are buyers out there, and we know are ready to go and buy. We know their access to mortgage ability is high over the last 3 years. They're catching on to that too, especially with interest rates. So the next slide shows you that if we took a mortgage out for $250, and let's assume that prices went up 4%, that's what we're projecting based on the Home Price Expectation Survey. And let's assume we took the current interest rate of 3.98%, and we took the interest rate projected in 1 year from now, 5.1%. What would be the payment differences? And on a $250,000 loan, over the lifetime of the loan, you're losing $60,000 in family wealth. So, what does that all mean? Well, I just want to wish everybody a happy and healthy new year. And I'm going to get out there and buy some houses. And you sellers, come to one of our home seller seminars. We're having a breakfast seminar January 24th at the Hilton Garden Inn. All you have to do is go to Home Shark Seminar to sign up, have breakfast on us at 9:30 to 11. And at 11 to 12, I'm having a private staging workshop just for people on the blog. So come by and visit. You have to register. So go to homesharkseminar.com and we'll see you next month. Have a great day.